Hi guys, welcome back to the channel. Kelvin here. As you can see, for this video, we have invited Gregory to the channel. Greg is the founder of ROBOADVISORS and Endowus, which is a low-cost way to invest your cash and CPF. So welcome to the channel, Greg.
Thanks Kelvin. It's great to be here.
Yeah, thanks for your time also. So can you share a bit more about yourself? Like, how do you started and how do you get to start up Endowus?
Yeah, I think I started my career in investment banking at one of the big international investment banks, institutional financial services. And something I learned there is that the way I was investing myself and the way my family has been investing for a long time, and then the way my friends who were just starting to make money because we started out our first jobs, were looking at investing in markets, talking about stocks and everything, was extremely different from the way the biggest institutions in the world invest their money. So I always thought, okay, well, this is really strange. I kind of got into it at that time, having traded my own stocks for a few years. I even got into options at one point. I realized how difficult it was to consistently do well. So I kind of got into it. I started reading a lot of papers and the academic behind it, talking to some of these institutional investors about how they invest. And then I deployed my own money into a portfolio of low-cost ETFs at that time. Okay, so I didn't think much of it. I'm someone who really cares about being very, very efficient with my time and money. And if I can optimize anything, I will do it, right? So I'll go out of my way to over-optimize. So I didn't think much of it. Friends would ask, how do you invest? I told them, okay, I buy these ETFs on this broker, etc. But meanwhile, I always knew there were other products out there that were difficult for retail investors to access. But it's okay, we carry on with life. We focus on our career. We focus on things that are really beneficial in our life. So I was very fortunate to have some very good mentors early on in my career, and I always wanted to get into something more entrepreneurial. But to be honest, I was a bit scared, right? Never done it before, didn't know where to start. So I joined Grab Taxi in 2015. I was lucky to be there a bit early. I wouldn't say super early, but kind of early, and helped to start their payments business in the entire region. So if you remember this is when Grab was taxi only and cash only. 2015, can you believe that in 2015, it was cash only. There were no cards on the thing. There was no Grab Pay, nothing. So this is it feels like a lifetime ago, but it was only 5-6 years ago, so not that long ago. So I was lucky to really help start the payment business there. Left in 2017 to start Endowus when I was actually trying to, invest for myself and my family again and help my wife invest her CPF because, she's been working for a number of years, and I was like, oh my gosh, you have so much CPF and it's not being invested. That was crazy to me because to me it's being really efficient. And I was like, okay, well, let's go to the bank and let's try to figure this out. And we went, we lined up at the bank, we got a ticket, we filled out a form to get a CPF investment account number. 10 days later, we got a piece of mail to say, okay, this is your CPF investment account number. We went back to the bank, and they were then trying to sell me some crazy fund with some crazy fees, and I was like, no way, this is ridiculous. So I went back and actually, with a couple other people, we said, okay, well, this is a real problem. You're telling me that everybody is struggling with this problem, and everyone is being sold these high-cost funds, even if they want to invest. And then we looked at the outcomes, and actually most people who chose to use their CPF to invest did worse than leaving it in CPF. Right? And that is horrible. Right. So we were like, we definitely have to solve this problem for ourselves, for our families, for our future, and actually for society as well. And what's amazing is that, I think a lot of people in the government as well are supportive of giving people the choice they need and hopefully the advice they need to make the right decisions. Now, advice comes in a million different forms, and many people have a lot of different investment strategies. We're a very boring investor, very like fundamental, long-term, academically driven. So I'm sure we'll talk about that more later. But basically, that was the start of Endowus. But what really became crazy to me, and was like the total aha moment, was when I started talking to all the fund managers. And when I talked to the fund managers, I said, okay, we want to start this platform. We want to really create this beautiful end-to-end digital experience so that you can invest your CPF easily, cash and SRS, all your sources of money towards your life goals. Like, that was the objective. And they were like, okay, that's great, but how much do we have to pay you? And I said, what do you mean? You don't have to pay me anything. I want to use your best products to service this market. They're like, no, but for all the distributors, we have to pay them. Right. Otherwise, they won't sell our funds. And then I realized there's this thing called the trailer fee. Right? And I was like, wait, hold on a second. So you're telling me that all the brokers and advisors and distributors, when they sell your fund, you need to pay them a recurring fee, right? Once they actually sell your fund, and let's say you buy a fund and you're just sitting in that fund for 3 years, you're paying the fund manager, and then the fund manager is paying the distributor who sold you the fund for 3 years for doing essentially nothing.
Right.
And also the distributor is like, obviously I'm going to sell funds where I make more money.
Correct.
So the entire industry is incentivized against you. So really, Endowus' mission is to bring fee-only wealth management for everybody, right? So it's to bring that expert quality advice, that fee-only wealth management to everybody, because it will lead to better outcomes and a better future. And that's really what we've been focused on.
Yeah, I think that sort of reflects in Endowus' kind of performance.
Yeah.
Yeah, right. People have invested through Endowus and they have seen higher returns compared to just living in CPF.
Yeah, I mean, I think, we are what you call this is like, yeah, I think we need to come up with better names for these things. But we're what you call a strategic passive asset allocator. And it's very hard to try and outguess the overall market. I mean, asset allocation, which is like, I want this amount US, I want this amount stocks, I want this amount a sector, technology, for example. I want this amount China, I want this amount in fixed income or in bonds, right? This type of like making that top-down decision actually should not be too different from the overall market and should be at a risk level that is suitable for your behavior and your goal. Okay. So, and once you do that, you can fill like the US bucket with the best US fund you can find at the lowest cost.
Okay.
You can fill the emerging market bucket with the best emerging market fund at the lowest cost. And all of that together is what makes up what we call our core flagship portfolios, which we have for CPF, SRS, and cash at a very low cost across the entire risk spectrum, from 100% equities to 100% fixed income.
The biggest difference about Endowus and other robo-advisors is that Endowus, like you mentioned, you taught to fund managers to offer their products. So like, why not go for ETFs instead? Like, for example, VO, while for Endowus product, it's like 0.4, 0.5%, which is much higher fee. So like, how will you justify offering such a high fee instead of just normal ETFs?
So we actually don't care if it's an ETF or a fund.
Right.
What matters is that the total cost to execute and to own and to rebalance and to everything else after that, implicit and explicit cost, is the lowest cost way with Endowus.
Right.
So when you trade ETFs, for example, if you are trading ETFs, and I know a lot of people, and I think ETFs are a fantastic invention. If you are trading ETFs, you should definitely look into the UCITS range. You definitely need a broker that can trade in UCITS. You will be paying a bid-ask spread.
Right.
when you trade the ETF, even if you're using a zero-cost broker, you're paying a bid-ask spread,
Right.
and then probably an even higher bid-ask spread because they need to earn their fee from the other side.
Correct.
Okay, so we know all that. Then there's withholding tax implications. That's why the UCITS range of ETFs is a better thing to buy. This is what I was having. My family, my wife and I were managing our money in this before Endowus, so I know a lot about it. And if you're buying U.S. listed ETFs, you may also be subject to extra withholding tax and potentially estate, or what they call like the death tax,
Right.
in a less nice way, estate tax, death tax, because it's a U.S. asset. And then on top of that, you have FX, when you go in, when you go out. So there's a lot of implicit and explicit cost related to investing in ETFs, which is why we work with fund managers to bring their best products on as funds. Now funds, they trade at NAV, they can list share classes in Singapore dollars. I mean, for example, we just listed a broadly diversified US fund, or not listed, sorry. We put on the platform a broadly diversified US fund by Amundi,
Right.
which is a $2 trillion asset manager in Europe, in Singapore dollars at 0.05%. Lower cost than any ETF available in Singapore and actually in all of Asia. And I think it's a fantastic way to help investors DIY invest on Endowus too. Like through FundSmart, we now have almost 300 funds available across over 40 managers. Many of those funds are institutional share class.
Right.
So another reason why we use funds is that the strategies that we're using, a lot of them don't even exist as ETFs.
Right.
An example of that, I'll give you two examples. An example of that is dimensional funds. In a single dimensional fund, you are quantitatively allocated to over 10,000 securities around the world, emerging markets and developed market. And their algorithms are not trying to say, oh, we should buy more China now, or we should buy more gold now, or anything like that. They're actually saying, we will buy more and rebalance the overall portfolio to buy more value companies, to be overweight, so to have slightly higher allocation to smaller companies, things that have the greater potential to grow. But they diversify this across, over 10,000 companies in the world, and it's just automatically running, and they've had a fantastic track record.
Right.
That strategy does not exist in ETF. And another example is when you buy fixed income, because we're based in Singapore, because you might have a mortgage in Singapore dollars, you actually want your fixed income to be hedged to Singapore dollars.
Correct.
Now, we don't know if Singapore dollars, US dollars, like how that's going to go, but we should take that equation out of your decision-making process. So we worked closely with PIMCO, which is one of the biggest fixed income fund managers in the world, around $2 trillion in assets as well, to bring their institutional share class Singapore dollar hedged products into Singapore at extremely low cost and make them available to everybody. So make them available to our retail, accredited investors, basically anyone who wants to buy them can buy them on Endowus.
So in short, you went for funds because they are like the implicit and explicit are much cheaper compared to other fund managers, and because the fund managers offer some sort of strategy which may help to increase returns overall.
Yeah, that's right. The availability of those different strategies.
Right.
Yeah.
For new investors, when they look at like Endowus, the core portfolio giving maybe like 11% return, but if they look at something like S&P 500 giving a 13% return, so obviously like they'll be thinking, hey, this is high return. Why should I go for that? Why should I go for Endowus instead?
Yeah. So I think that's a great question, and it's about diversification.
Right.
We don't know. I can always look back and find something that's returned better or amazingly well. What's really important to remember is that we cannot look into the future.
Right.
Now, when it comes to what we call your core family wealth, we don't think you should be making that type of a decision. If you think, for example, oh, the US will go up more than the rest of the world, or China will go up more than the rest of the world because it's been so depressed. We call that a satellite position.
Right.
You can take a view on the markets through a satellite position, and we have satellite portfolios that are diversified and best in class to help you express that view. But again, we think it is definitely secondary to your core essential life goals and essential long-term wealth building,
Right.
which is what is in the core portfolios. So your example about the S&P 500 is a good one. It's amazing to know that from 2000 to 2009, the S&P 500 had a negative total return for the entire decade.
Correct.
Okay. Now, obviously, we're picking a little bit here, but that's 10 years of investing in just the S&P 500 where you would have had a negative total return. If you had invested in global stocks, which includes the US,
Right.
you would have had a positive return, not an enormously positive return, but you wouldn't have had what we call the lost decade syndrome. And you want to avoid that. Okay, a really quick story. The first fund I ever bought, or actually I didn't buy it, I was sold the fund because I walked into a bank and they sold me the fund. So I'm in my mid-30s, and when I started investing, the most popular thing, if you walk into a bank, was, and I'm sure a lot of your viewers actually relate to this, was the BRIC countries. I don't know if you remember this. So the BRIC countries was Brazil, Russia, India, China.
Okay.
And that was the huge theme coming out of like the global financial crisis. They're like, emerging markets are the future. China opening up, Russia opening up, India, the biggest democracy in the world, China, the factory of the world. And, all of it sounds great, right? All of it sounds great. So I put all my hongbao money, saved up over my first, 20 years of single life, into this Brazil, Russia, India, China fund. And 10 years later, I looked at it and it was negative. so my point is it's very hard to pick. And usually when things are really hot, they're not going to be hot for much longer. So, I tell people, like, you can actually go onto our investment fund list, which has the around 300 funds on FundSmart, and you can sort by, 1-year returns. And even in this horrible market, you'll find funds that have returned 50% in the last 1 year. But would I advise you to buy that fund? No, I would not. Right? Not with all your money. If you have a view, and the funds that have outperformed are now the commodity funds, for example. Right? If you have a view on commodities, you can express it that way, no doubt. But would you use that for your core long-term wealth? Absolutely not. I know that it's extremely popular to sell this stuff when I'm pushing product at you, because it's so easy to say, hey, look at the returns. Hey, and by the way, it's only 2% sales charge, right? So you're going to earn that back. If you invested 3 months ago, you would have earned that back in 1 week, right? So you need to be very careful. And I really encourage people, to listen to Kelvin. I encourage people to do a lot of their own research, because so much of investing is actually behavioral and knowing why you're investing that money. You need to know why you're investing that money, for what purpose in the future.
Right.
I suffered from this as well. When we start out, we are constantly trying to just get the highest return possible.
Correct.
And as a result, you're just chasing your own tail and you're chasing the market, and you do everything that every book and academic tells you not to do. You end up buying high and selling low. I know from personal experience. So.
Right. What you're saying that, to you guys, diversification is of a higher importance, even though US may still perform well, but it's not guaranteed to perform at a 10% kind of return forever.
I would say the long-term return of global stocks is about 8 to 10% annualized. If you think about it from a philosophical standpoint, the question is why? Why is it that stocks return 8 to 10% annualized? Oh, and by the way, very few years are actually 8 to 10%.
Right.
It's going to range from -40 to +40% in any given year, and most are in the 20%, the teens, and all that range. Long-term average 8 to 10%.
Right.
And the reason is that if you buy stocks, which means that you're buying a share in companies, you are buying into the effort to grow those companies.
Right.
And actually, it's funny because a lot of us all work or buy things from these companies every day. So in a sense, you're buying into the collective effort of humanity,
Right.
to produce more goods and services better, to be competitive against each other. And that has produced what they call a risk premium or return premium. So it's produced a return that is higher than, let's say, leaving money in the bank.
Correct.
For example, in financial jargon, they call that the equity risk premium. But it's produced, let's say, a real return. So a real return is a return after inflation of about 5 to 6% long term. And it's volatile because you're owning shares of a company. But if you hold on for long enough and you have a diversified strategy, so you're not focusing on single companies or single sectors or geographies, you can, what we call harvest this equity risk premium. So you can earn that extra return over time. And that is what people are getting when they invest with Endowus in our advised portfolios.
So when I check Endowus, on Endowus page about you, the first thing I click in, I see your handsome face.
Oh.
But the other thing is that you mentioned that you wanted to empower everyone to invest better. Obviously, you see some kind of issue with the current financial industry, so that's why you have to create Endowus. What's the problem that you see right now? Is it there's a conflict of interest? Is it too hard to understand? And what is Endowus doing to address all of this?
Yeah, so I think that the biggest system problem is that so much of financial services, so when I'm, in a lot of places, if they're selling you a fund, they're earning a trailer fee kickback or sales commission from the product provider. So in this case, the fund manager. They're probably also earning a sales fee. Now, these two types of fees, one is different for every fund. So I'm obviously very interested in selling the funds that pay me more. Right? If I have two China funds and they're going to have similar performance, but this one says, I'm going to pay you 1% per year on any assets you give me. And this one says, oh, I'm only going to pay you 0.5% per year. Which one are you going to sell? Obviously this one. So as a result, the fund fees in Singapore, this is a crazy statistic. Business Times has reported on this many times. The fund fees in Singapore are amongst the highest in the world because of this distribution problem. Okay, so that's one side of it. The second side is the transaction fees or sales fees. So if I'm a broker and I'm buying or selling stocks, I make money when you transact. Okay, that's very clear. Right. It's very transparent that I make money when you transact. There's nothing wrong with that. But as a broker, I need you to transact more, right? And as a broker, I want you to take leverage so that the size of your transaction is bigger and I earn interest on the leverage. Okay, so that's all very straightforward. Right. If I'm selling funds, I want to keep on selling you funds so that I keep on making that sales charge. We call that a churn, churning. Mm-hmm. Now, all of that leads to very bad advice because now I want to sell you the fund that pays me more. I want to sell you a fund or a strategy that has maybe recently done really well, but may not be appropriate for you. Because if it's recently done well, if I tell you, hey Kelvin, this fund did 10% last month, and the market went down by 5%. This fund did 10% last month. You need to buy it now before it's too late. I think all of us have heard this have heard this pitch before, right? I want to keep on selling you stuff that is returned well recently because I get the sales fee. If it doesn't do well, I say, hey, no, let's switch to this fund. Look at this fund now did 20% in the last 3 months. I don't know what happened to that fund, but this fund did 20% in the last 3 months. So this cycle just continues. The churning cycle continues. And then you add on top of that the trailer fee sales commission problem. If you're a fund platform or a brokerage platform, it's, you create even an experience that makes you want to trade more. Right? I will be sending you an email, and we all get this email. Top 5 winners and losers this week, for example. If I'm an investor for my long-term wealth, why do I care about the top 5 winners and losers for this week? But sometimes I look at it and I'm like, oh my God, that stock went up by like 75% in the last week. It's exciting. It's exciting, but it makes me want to trade. It makes me want to gamble. So we want to really differentiate like speculation and investing for that reason.
Right.
Yeah.
So for Endowus, you care more about the long-term stuff. So you don't care about all the short-term gains kind of stuff.
Again, we think it's a satellite position.
Right.
We actually don't like what our client advisors focus on, and we meet with clients all the time. Every day we're having calls with clients. So if you want to, people think that we're digital only, but actually you can call in and have a conversation with our client advisors. We really only focus on the core portfolios.
Right.
So core, you could have, 100% stocks, 40% stocks, 60% bonds, 100% bonds, different portfolios for different objectives you have in your life. And then if the client says, hey, I have a view on China, we say, okay, don't mix that up with your core portfolios. Let's create a satellite position to express your view on China. And I think that's very important for people to differentiate the two buckets. And then if this person says, hey, I want to trade Tesla, we say, okay, well, you can use a broker to trade Tesla. You cannot trade Tesla on Endowus.
Right.
Okay, and that's fine.
Right.
Yes. That's fine. Okay.
You have started Endowus since 2017 until now. That's like 5 years.
Yeah.
Are you actually satisfied with Endowus' performance, or do you think like Endowus could have done anything better?
I think there's always things we can do better. I mean, in general, I think we've done okay.
Right.
At the end of last year, we announced that we had crossed like 1.5 billion in assets. We've been backed by a lot of great investors. Endowus was actually mostly self-funded by the employees of Endowus. And then at the beginning of last year, we started to raise money externally. And a few investors like UBS, for example, the biggest wealth manager in the world, they made their only wealth tech or fintech investment in Asia in Endowus at the beginning of last year. More recently, EDBI, so Singapore's Economic Development Board investment arm, EDBI, invested in Endowus as well, and as well as Singtel, Samsung, and a lot of other great brands and names out there. So they're all owners in Endowus, which is really nice. I think we can reach a lot more clients, right? I think we can reach a lot more clients. I actually think the adoption of Endowus has been moderate.
Right.
I would say that we don't do as much in terms of like promotion as a lot of other players. I mean, we've seen what a lot of promotions have looked like with other platforms. We haven't done as much because we think that we want people to choose Endowus for their long term.
Right.
And we think it's a very serious decision. So hopefully more people find us, understand us, and can invest their cash, CPF, and SRS with us.
Yeah, so for that, I think I'll just let the results speak for themselves. Even like heavyweight, Mr. Lu,
Yeah.
Mr. Lu, that 165 was endorsing you guys. I think there's a reason that he likes Endowus. So even without ads, eventually the results will just speak for themselves.
Yeah, and Mr. Lu really, he really found us and very quickly understood what we were doing.
Right.
And said, I think this really needs to reach more people. And that's why we've engaged with him. We've done webinars with him, more education with him, on top of his 1M65 movement about optimizing your CPF, with the SA top-ups and everything. But also the next step, which is taking risk. And it is taking risk. When you invest, you are taking on the volatility. But when it comes to investing your CPF, it is your longest term money in your life. And this is exactly the type of money that you should be investing to, like we talked about earlier, harvest that equity risk premium and take part in the economy with your money. And that's hopefully what we've been able to do for a lot of people.
What's the biggest issue for Endowus right now?
I mean, the markets are bad right now. I think everyone knows that, right? We've gone through a very tough 6 months. And I think if we look back at history, it is when investors least feel like investing that they should be deploying. Now, the problem is everyone tries to catch the bottom. Now, it's very hard to catch the bottom. It's very, very hard to catch the bottom because once it bottoms and everyone tries to catch the bottom, the market moves and it's too late. So trying to educate our client base to invest through the bottom is something that we've been really focused on, right? If you think about what we're going through right now and the turmoil we're going through, we don't know what the markets will do in the next 6 months.
Right.
We really don't. And any prediction you see is a prediction. In fact, we should record all the predictions and then 6 months from now look back at what everyone said because it's really a prediction. We don't know what the markets will do in the next 6 months. We know what they'll do in the next 10 years directionally, right? But we don't know what they'll do in the next 6 months. So because we are in a depressed state, let's say you want to buy $100, okay, and you can put that in any amount. You get $100, $100,000, $100 million, whatever it is. I would say split that up into 5, so $20 each, and invest that over the next 3 to 6 months.
Right.
Systematically. So the market could go up by 10%, continue with your deployment plan. The market could go down by 20%, continue with your deployment plan. I really think we're in a situation where people can buy into the market at a lower cost than it might ever be again.
I also did make a prediction.
Okay, you did?
Yeah.
I need to find out what that is and then...
Don't need to find out. But I'm still dollar cost averaging in as usual because I don't trust my own prediction.
You don't.
Yeah, it's just a fun prediction.
Yeah, okay.
Yeah.
Fun prediction. That's
correct.
Good.
Over these past few months, companies haven't been doing well. We have seen layoffs from tech companies like Google or this. And closer to home, there are even robo-advisors doing layoffs. So is Endowus actually profitable right now?
The answer is no, Endowus is not profitable. Obviously, we make revenue from our customers, and we're very, very clear on the revenue we make. You can log into your account, and you can see the fees we have made from you from the beginning of your journey with Endowus, right? And sometimes we get calls being like, oh my gosh, the fees look so high. We're like, actually, the fees are very low compared to what you were paying before. You just didn't see it this way. So being transparent is super important. We are not profitable. We're actually investing heavily in our people and our growth. We are not doing any layoffs. We are maybe hiring more selectively because a lot of talent is coming onto the market now from people in fintech in Singapore or even the big corporates, multinationals like Google, Facebook, like you mentioned. People are coming onto the market, so actually it's kind of good for us because it's been a very, very competitive job market for the last few years. Being a smaller guy compared to the Googles and Facebooks, it makes it very difficult. But now I feel like we have a fighting chance to get some of the best talent out there to really join our mission.
Moving forward, what is Endowus' future roadmap? Are you guys planning to go IPO? Will you be adding more trading features like Safe Trade did? Or even roll out your own investment savings plan? Because funds is in Endowus' portfolio. Why not just throw it into a savings plan and sell it like what the insurance companies did?
I think none of those things. We're really focused on wealth management, giving people a better wealth experience, advancing their experience of their wealth, and that means doubling down on advice, how we deliver that offline and online, and through a lot of our content and webinars, access to products. So we're broadening the access to products that we have. But again, we spend a lot of time curating what we put on the platform. So as you know, my business partner Sam was the former CEO and Chief Investment Officer for Morgan Stanley, investment management for all of Asia. And he runs our investment office of 10 people today. And they spend every day and every night not looking at stocks, but looking at managers across every single asset class, right? So whether it is a fund with a global mandate, or a fund with a commodities mandate, or a fund trying to focus on China. We want to find and bring the best ones for each category onto the Endowus platform. So that's what we're very focused on, so broadening access and then keeping the fees low and fair.
Right.
Low, fair, and transparent cost is super, super important to us. And of course, safety and security, right? I think as a wealth management platform, we invest a lot in that. And it's one of the reasons why we're the first digital advisor for CPF money.
Right. Congrats.
Yeah. Thank you. Yeah.
Do you consider as Endowus' biggest competitors? Is it the banks or the robo-advisors or none of that at all?
I mean, I think it's a bit of everything.
Right.
I think the adoption is still very, very early. And people will start to realize when they have better outcomes that Endowus is actually doing the right thing. But it will just take time for them to realize that. And we totally get it. It takes time to trust a new brand. And we're asking for one of the most intimately important things in your life,
Correct.
other than your family probably, right? And that is your money, which enables you to do things for yourself and your family, right? And that's super, super intimate and important. And already, like, we've seen all these crypto exchanges blow up in the last 2 months, right? And then freeze withdrawals. And everyone thought they were staking and yielding and all this stuff, right? It's really scary, and people are losing their life savings. It's really horrible. So investing a lot in safety and security is really important. That's why we still have, and I think we're one of the only players that have our double ledger system, where every Endowus account has an account in your own name at UOB Kay Hian as well, the largest broker in Singapore. And it's through that connection that we were able to be the first digital advisor for CPF. They were made a CPF investment administrator. They are the ones handling client assets. We are the financial advisor for you and the fund platform for you. We wanted to invest in that extra layer to make it a safer place for people to put their wealth. Yeah.
Moving away from Endowus,
Yeah.
let's gapo more about you. If you can only pick one fund or ETF or just stock,
Yeah.
which would you go for and why?
Okay, I'm younger. I'm mid-30s. So I'm
Okay.
mid-30s. So I have a long investment horizon.
Right.
So I would want to be in 100% stocks.
Right.
So 100% global equities. And for that, I truly believe that the Dimensional World Equity Fund, which we brought in Singapore dollars a few years ago and made available to everybody, has, again, over 10,000 companies in a single fund across, I think, 40 markets.
Right.
It's extremely low cost, and it is systematically, quantitatively managed by them to be what they call like tilted towards. So like if we had, this glass of water,
Right.
and this was the overall market, they just tilt it so that it's more towards small companies, value companies, and profitable companies.
Right.
And in the long run, these, what they call like dimensions or factors of return, have produced outsized return versus the overall market. If I could only buy one fund, it would be the Dimensional World Equity Fund on the Endowus platform, obviously. Because I think that it will just do very well over a longer time frame. I don't need to manage it. I don't need to pick anything. I don't need to change anything.
So this is actually something interesting that I realized. If anyone go and check like the Financial Independence Reddit, they are mostly recommending a world ETF rather than just a single country or single stock.
Yeah.
Recently, we have seen a lot of people talking about getting high returns from growth stocks. Even me, I was talking about it. But I'm slowly coming to realize that investing is actually a secondary way to grow your income. It shouldn't be the primary way. Like
For sure.
chasing high growth stocks, you may get the return, but you may not also. If you want a very passive way of investing, just by investing in a world fund, you will eventually still be able to grow your money, but in a much more slower and safer way.
Yes, that's right. So, I mean, okay, this is not a fund, but a portfolio. For example, the core portfolios at Endowus, where we have our flagship, our ESG sustainable set, and then our factor, so only quantitative set, all have 100% global stock diversified exposure.
Right.
Yes, they have slightly different styles based on your preferences, but for someone who really is just getting into investing, I think our core flagship portfolio the portfolios there are the real like effortless way to invest.
So for the next question, what keeps you up at night?
I have 3 kids.
Okay.
and that can be keeping me up at night.
Right. I have one also, and that keeps me up at night too.
How many kids?
One.
Okay. Yeah. And that's fun. I really believe in the Endowus mission because I think that in a small way, if we help people invest better, the positive influence that can have on people's lives so that they can spend their time on their primary source of income or their primary source of happiness, that can lead to like more creativity, more innovation, and so much more in the world. Right. So what you said just now about investing being a secondary source of income, that actually makes sense.
Right.
Of course, until you cross a certain age where your primary source of income maybe starts to decrease and you retire, then investing and earning from investing or passive income from investing becomes your primary source of income. But for the working professional who is still out there and learning and progressing their career and everything else, it is totally a secondary source of income. People need to know that because investing is meant to be hands-off.
Right.
It's meant to be hands-off. So if for 10 hours a day I'm at work, working my butt off, I expect to generate a higher return than investing in a hands-off way. So I think this is really important, and maybe the last few years when all this day trading, meme stock trading, crypto trading have really made a lot of people very rich, and then have now everyone's lost a lot of what they've gained. I think most people are now underwater again from where they started, even though the returns were like this. It's not a sustainable way to grow wealth. It's just not. And I hope that right now people are not turned off of investing because they were speculating, right? Because they're different, and you need to differentiate investing and speculating. So if we don't reach more people, so on what keeps me up at night, if we don't reach more people, I think we as a society will actually suffer, and the suffering will be very, very long term.
Right. Or you could just start a YouTube channel and teach people about investing.
We have that in Endowus Insights. Yeah.
During these whole uncertain times, like you said, everyone is trying to stay away from investing. What's one advice that you have for investors who are still holding on or back holding during this whole period?
Well, make sure that what you're holding on to makes sense, right? Because a lot of times I tell people like, hey, you have this stock. Why do you have this stock? And their answer to me is, oh, I'm holding on to it until it gets back to my cost price. And I'm like, hey, dude, the market doesn't care about your cost price, right? The market doesn't care. You have to be investing in a way that makes sense for you. I would say, look at your portfolio, and now is the time to sell the things that don't make sense and buy the overall market that does make sense.
Right.
Or if you have a view on China, that's totally fine. But you're holding on to like 2 China stocks and you expect them to come back with the rest of China, that's a very bad strategy. I would sell the 2 China stocks and buy a diversified China portfolio, for example, so that you don't miss the upswing, right? No one knows if those 2 China stocks will be a part of the overall market going up. And so that's one thing. And then, of course, like I said earlier, buying through the dip rather than trying to time the dip is the way to behaviorally get over this type of a market. It's interesting, right? When people are sick, they go to a doctor. When people want piano lessons, they go to a piano teacher.
Right.
When people want to manage their own money, they really just want to do it on their own. You can be capable of doing it on your own, but you need to research what to do. Right? Like if I get a cut, I don't have to go to the doctor. I can maybe look up my cut and what it looks like, research on it to give it the right treatment. Or I can go to the doctor and get advice so that I know that I'm taken care of, I'm doing the right thing. I think investing your money and managing your money is no different, right? You need to take it seriously. You know, if you get a cut and your friend said, "Oh, that looks like you need this thing," are you going to be like, "Okay, thanks, I'm just going to take that"? You need to be very critical. It's a very important part of your life, and if you can get it right, I think it can just create a lot of freedom for you and your family. Right. So, you know, invest in the right way. Use Endowus as an advisor if you want. Of course, I would advise that you do, but treat it seriously.
So thank you for the advice. Hopefully, after all these questions, investors will have a much better insight on how to invest their money. Once again, Greg, thank you for this interview, and may you all hot big.